Okay, welcome everyone to another edition of our weekly crypto chat by Huobi Research. I'm your host Jet, and with me, my colleague Henson. And just to note, today we have two special guests with us, Johnny and Dave. Just to let everyone know, they will be taking over for me heading forward on this weekly crypto chat. So be sure to welcome them during whatever questions that you may have down the road. So as usual, we are part of Huobi Research, part of Huobi Global, which is one of the go-to exchanges globally for crypto assets. And our group is mainly aiming to spark conversations on the latest crypto topics every week and give you our take on all things crypto. So be sure to follow us at Huobi_research on Twitter or huobiresearch.medium.com to follow us the latest articles. So these last 2 weeks, we have an article produced by Johnny about who will face the latest liquidity crisis, and also a Game 5 topic on Epic Games by Hansen. So be sure to check those out. As usual, be sure to leave any questions that you guys have in the channel, and we'll get through to them at the very end. And as usual, note that everything said here is not investment advice and does not represent the opinion of Huobi or Huobi Research, and is that of our own personal opinion. So with that said, let's dive in, right? So this week, Bitcoin has been range bound around 19 to 21K. ETH, has also stabilized around 1.1 to 1.2K. And with that said, what's the latest topics for this week, Hanson?
Right. So thank you, Jack, for the introduction. So here are the topics for today. And at the end of this chat, we'll also have a Q&A section to answer any question you have. So please type your questions in the chat. So starting off this week, we have some news about stablecoins. So currently, there are some concerns about USDT and USDC. So we know that these two stablecoins are fully collateralized, backed by fiat assets in a 1-to-1 ratio. So Dave, can you tell us about what is going on and should we be worried?
Sure, Hanson. So I think what the market is concerned about stablecoins is like whether these stablecoins are going to have 1-to-1 ratio to US dollars or is going to be paid. So right now, I think in a bear market, I think the most important factor is to separate like what's the fact and what's the rumor. So I think separating the rumors, I think the stablecoins about USD Tether and USDC, stablecoins are pretty healthy. So let me dive in. So by looking at this chart, you can see that so a green line, it represents the market capitalization or circulating supply of USDT Tether, and also the blue line is the like USDC market capitalization with circulating supply. So I think like from the peak value of 83 billion, Tether has some sort of like drawdown to now 66 billion, and also USDC on the other hand rise from the local bottom of 48 billion to nowadays 55 billion. So we can see that from this chart on in regard to like trading volumes, USDC is having a steady and a healthier growth than Tether, but Tether is having a larger and a nicer market capitalization compared to USDC. So taking a look at the next slide on the financial information about Circle. So according to Circle's the official website, which is backing the stablecoin USDC, Circle literally has the 85 million in total revenue in 2021. It has a forecast of total revenue to be like 562 million in 2022. It has an adjusted EBITDA from like negative 54 million to the forecast in 2023, 820 million. So it has like 49% of revenue growth forecast in 2022 and 563% of revenue growth forecast in 2023. So if you look at the forecast and the financial information, the growth is epic, it's massive. So considering the operating profits, so it turns from like 144 million negatively to $677 million for itself, the operating profit, and considering the growth, the net operating revenue generation is so big, it's so massive. So considering the financial statement, so the forecast, the health of the balance sheet also. So Circle raised like 400 million with capital investment from BlackRock. BlackRock is the largest asset management firm, in the world, with joint investment with the Fidelity, Marshall Wolves. It also has the special purpose acquisition company process with Concord acquisition. So it's going to be, in process to be publicly traded firm on New York Stock Exchange, NYSE. So considering these facts that it can issue shares, has circulating supply and circulating shares, and also to separate the rumors from the fact that it has some sort of loans that it cannot be able to pay back in the rumors. So I think that USDC is pretty much healthy. So what do you think, John?
Yeah, there have been some rumors about USDC and also USDT, their stability, and also investors are worried. I think probably triggered by the probably being traumatized by the event of UST and Lunar, and worries spread quite quickly across the space. And I want to raise an interesting point that actually they are fully collateralized, which means they are very, they're backed by real asset behind them. Unlike UST and these algo stable coins, they are not backed by dollar asset, and they are different. Actually, they work differently. And in my opinion, I think what's safer than fully collateralized stable coin. We also have over collateralized stable coins like DAI, and yeah, they've mentioned that USDC and USDT, they have really sufficient reserve and capital to back up their withdrawals, their redemptions, and they have pretty good asset allocation. Like they have short-term deposits and also commercial paper consisting of 85%, and they only allocate like 6% in other investments for USDT. And I currently I don't think there's any problems. I don't see any signs showing that USDC and USDT are going to have some liquidity crisis or something like that. Rumors spread quite quickly across the space, but as investors, we should also stay calm, and also we have to look at the facts to determine what's the right decision to make. And currently, I don't see any signs to be worried about.
So true,
Yeah.
true, Johnny. So I think it's right. It's like so now I'm going to talk about Tether. After talking about USDC and comparatively, now I'm going to compare with Tether. So Tether is 84% funded by cash and cash equivalent, according to Tether's website, and also short-term deposit, commercial paper. So if I'm really evil, let's say I'm very evil. So if I want to trigger a depay of the USDT, Tether, so a large portion of the 84% has to be redeemed, instantly, like in a very short period of time. It has to trigger a panic for USDT to depay, just for an instance, like given that, USDT has a market capitalization of 66 billion. It's comparatively hard for a normal firm, sort of like a financial firm to quickly redeem all the cash onto the 84% of the entire USDT capitalization, with the asset backing that 66 billion of market capitalization. So it's very hard, and USDT also has loads of demands apart from like retail exchanges like Binance or FTX, the retail side, so like KuCoin, many of the institutional OTC exchanges also demand USDT to open and close their long and short portfolio rebalancing positions on the market. So the demand for USDT is so strong that if any institutions are soft doing things so easily, and they want to redeem the USDT as quickly as possible at 84% of the total market capitalization, I think it's pretty hard. It's very hard to do it. So apart from that, the asset backed by USDT, is also associated with 4.52% corporate bonds, and precious metals, 3.82% secure loans, and also other investments. So I think like in this balanced portfolio of banking assets, I think it's pretty healthy to consider USDT in a healthy market demand, to disregard the rumors saying that USDT is going to debate. So I think it's pretty healthy to consider USDT as a stable coin. But the market also functions, as a function with volatility that in FUD or in bear market situation, the asset associated with USDT is going to have rumors, and more rumors, more volatility. So especially nowadays, like the new ecosystem is launching their USN 2.0, the algorithmic or semi-algorithmic stable coins of backed by USDT is fully collateralized. So if rumors spread on the market, I'm not sure if USN is going to drop on its values, but my perspective is USDT is healthy, and USN is going to fluctuate with their stablecoin properties, but it's fully collateralized with USDT in case USDT is healthy. So USN 2.0 is also healthy, and I also think that people can check on curve pool, the balance between USDT and also the other stablecoins, that if USDT is going to drop on a big proportion of the total market capitalization inside the curve pool, people are going to have a close look on the situation. So if there is a quick redeem situation, I think there is a quick drop on USDT level in curve pool. But overall, I think it's healthy. So what do you think, Hansen?
So I have a quick question. So going back to the slides in before, so we can see that you mentioned that USDT, the market cap of USDT is increasing while USDC is increasing. So is this a sign that like people are diversifying their stablecoin portfolio so that they might not face a situation like UST where a stablecoin goes to zero?
I think you're right. It's like disregarding, like USDT is falling on the market capitalization from the peak of the value of total 83 billion to now there's like 66 billion. I think it's overall in an uptrend. So to diversify the risk portfolio, like if one of the stable coins is going down, let's say that's the case, I think it's better to hold to diversify your stablecoin portfolios into healthy stablecoins like USDT and USDC. So in case one fails, you still have another stablecoin, to back up your portfolio. That's my opinion.
Good. Okay, let's move on to the next topic about GBTC. So GBTC, or Grayscale Bitcoin, is a public traded trust that tracks the price of Bitcoin. So the shares are supposed to be priced at roughly around the same price of BTC, but currently GBTC is trading at all-time discount, so roughly at around 30%. So Johnny, can you tell us about what is GBTC and why are we seeing such discounts in the fund?
Yeah, I would like to explain the reasons for, the increasing discount happening, in GBTC. You may have heard that the SEC just disapproved the conversion of GBTC shares to an ETF in the US. But before we delve into this issue, this incident, let me explain, the fundamentals of GBTC, what it is, and who the investors are, and let's have a look at the price chart of its recent development. Let's look at it. Basically, GBTC is also known as the grayscale Bitcoin Trust, is actually a commodity which tracks to the value of Bitcoin, but it's not very strictly tracked to the value of Bitcoin because it's not yet converted to the ETF yet. If you own a share of GBTC, it means that you have a stake of the company Grayscale, because it works like that. The Grayscale, the company, raise capital from investors who are interested in purchasing Bitcoin and owning Bitcoin. They will put their money in Grayscale, and then Grayscale will use the money to pass money to the agent Genesis, and Genesis will use the money to purchase Bitcoin on open markets. And after purchasing the Bitcoin, Genesis will and Grayscale will store the Bitcoin in Coinbase as a custody. And that's how people invest in GBTC. That's how they own Bitcoin indirectly. But fundamentally, GBTC shares actually represent the stake of the company, because the Grayscale company manages the Bitcoin for you, and investors don't have to worry about purchasing Bitcoin, storing Bitcoin, and also managing Bitcoin, something like that. It's more like a managing company, and it actually in past few years, the Grayscale Bitcoin Trust acted as a very lucrative and also attractive gateway for people who are not yet interested in crypto to invest in crypto. It acted as a very great gateway for people in the stock market to gain exposure to Bitcoin and also cryptocurrency in this method. And by bringing exposure to the stock market, more people involved in investing in Bitcoin and also cryptocurrency. More people learn about Bitcoin and also other cryptocurrencies. Actually, Grayscale also offers other investment trusts like Ethereum, Litecoin, and also Bitcoin Cash. But the main topic we are going to discuss here is Bitcoin Trust. Because there was news that we have heard the SEC disapproved its conversion to an ETF, and we are going to delve into the problems, and also we'll look into the solutions for the development of this pragma. Maybe we can look at the next slide. I want to show you some information about Grayscale's Bitcoin Trust. As we can see, the annual fee, I want to talk about the annual fee, is actually the management fee for owning the shares of GBTC. As I have mentioned that the Grayscale, the company actually manages the Bitcoin for you. You put the money in Grayscale, and Grayscale purchases Bitcoin for you and stores Bitcoin for you, so you don't have to worry about anything. So it basically charges a 2% Bitcoin and per year, and the charge is actually charged in the form of Bitcoin. So the Bitcoin they're storing, they actually take management fee from the storage. And there are two ways that investors can involve in the GBTC investment. The first is that investors can use cash to deposit into Grayscale, and Grayscale will purchase Bitcoin for you and store Bitcoin for you. And the other thing, and the other method is that you can either you purchase Bitcoin yourself, and then you store Bitcoin in Grayscale, and then Grayscale will allocate you the shares for you equivalent to the amount that you deposited the Bitcoin. And basically, I've just explained the procedures of involving in the investment of Grayscale Bitcoin Trust. And I would like to show you the next slide, and I would like to talk about the accredited investor thing. You can see that there's a minimum investment requirement of 50 grand, 50K. That's because the Bitcoin Trust is not open to everybody. It's not open to every retail investor. It mainly focuses on institutional and also experienced, as we call, accredited investors, private placements. What it means is that, for example, you can invest in Grayscale Bitcoin Trust if you have an annual income of 200K US dollar. Yeah. And that's the minimum requirement for being involved in investing in GBTC. And there is also some other requirements that GBTC has. For example, there is a locking period after you purchase GBTC shares, and there is a locking period of 6 months, which you can't redeem Bitcoin, nor you can't resell the shares into the open market. And because that redemptions are not allowed, if you purchase GBTC shares recently, you have to wait 6 months so that you can resell it into open market. It works like that. Yeah. So I would like to show you the next slide. Let's go to the next slide. I want to show you the price chart of GBTC over the years from 2016. I want to talk about the premium and also discount, because as we know, the thing that we are concerning is that the discount is increasing. So you may wonder what discount is and what premium is. I'll talk about it right now. So let me talk about the premium first. There are two data being illustrated on this chart, the gray one and also the green one. Let me talk about the gray one first. The gray one represents the market price per share of GBTC. It actually demonstrates the demand of GBTC shares in the stock market, while the green line represents the holdings per share. It means that Grayscale, the holdings of BTC from Grayscale divided by total shares, and we have this chart here. So the premium happens when the market price is greater, so that it exceeds the holdings per share to a level that they actually don't correlate strictly anymore, because as market price per share increases so much that actually when you mint, for example, when you purchase a GBTC share, and then you can actually wait till your locking period end, and then you can resell your GBTC share at a premium. It's actually an arbitrary opportunity for investors back then in 2019, when there was a premium, when the market price of GBTC of all shares exceeded the holdings of all shares, the holdings of Bitcoin per shares. And the vice versa works that way, that we call it discount, when the holdings per share is larger than the market price per share. It actually means that the demand for GBTC shares is actually decreasing, and also the supply of GBTC share is increasing. On the other hand, the value of Bitcoin is also decreasing, as we can see from 2021 to 2022, as the market price per share is less than the holdings per share. What it means is that the market price per share decreases more than the degree of that of holding the Bitcoin, the value, net asset value decreases over the period. And that's why we are worried about the discount, because the market share, the price of market share decreases, and you actually suffer a loss, because actually you have the Bitcoin stored in Coinbase, right? You want to redeem it to get the actual value, but SEC won't allow you to do so, because they just disapproved the redemption application. And that's why now investors are worried that the discount will increase further and they will suffer a loss. But in my opinion, I think it actually represents it's a double-edged situation. Like if you sell right now in the second-hand market, in the stock market, if you own GBTC shares and you sell right now, you purchase earlier at a high price, you're definitely going to suffer more, because as the discount increases, you can get back less than what you actually hold in terms of Bitcoin. And on the other hand, if you hold, there might be a possibility that Grayscale actually just launched an appeal to SEC, and they even hired a very well-known solicitor for representing the company, appeal against the SEC, and they hope there is a possibility that if the appeal is successful in the future, there might be more demand driving up the price of GBTC shares. And even after years, maybe after more regulation, as the market develops, it becomes more mature, and then when SEC approves the redemption, then we don't have to worry about the discount anymore, because at that time you can actually redeem your Bitcoin, and more arbitrageurs will come in, and they will make the price of GBTC. They will make the tracking of the value of GBTC closer to the value of what the holdings of Bitcoin is, and by that time, the discount can be narrowed down to for a negligible amount. And back then in 2019, the reason why there was a premium was that the demand for GBTC share was very great, because at that time, 2019, people were bullish about the crypto market, right? People were long on Bitcoin. People were under quantitative easing. They were very optimistic about the development of crypto market, and that's why there was a huge demand for Bitcoin. As I've mentioned, people will purchase Bitcoin, and they will deposit Bitcoin into Grayscale, and they hope that after 6 months, the unlocking period, they can earn some arbitration. They can earn a premium of like 15-20%. And on the other hand, because the GBTC share is actually at that time is isolated from the BTC selling part, because as you own GBTC shares, you couldn't redeem Bitcoin and you couldn't sell your Bitcoin, right? Because your Bitcoin was stored in Coinbase, and what you can do is you sell your GBTC shares. And what I mean is that this process actually transfer the selling pressure from Bitcoin, because people purchase Bitcoin, right? And then the selling pressure of them wanting to sell Bitcoin transfer to the stock market, and the selling pressure was then absorbed by the stock market, and that's why the demand was great, and the GBTC share price increased that much. Yeah. And I want to illustrate you the solutions for the pragma right now. Let's move on to the next slide, and let's move on to the next slide. Actually, right now, as SEC disapproved the conversion of GBTC shares to an ETF. And what can Grayscale do right now is that they launched an appeal, and some people might raise some solution like what if Grayscale and its owner DCG, what if they could just repurchase all the shares in the market and push up demand so that the discount can be narrowed down, so that investors of GBTC can exit or sell the shares at a minimum loss. Actually, I just came across a report from Masari. The report was written by the CEO of Masari, and I found it quite interesting that the author Ryan mentioned that actually Grayscale and also DCG did it before. They repurchased the shares of GBTC in October 2021. They wanted to narrow down the discount problem. They purchased like 388 million worth of shares, GBTC shares. However, the result was not very optimistic. The discount was still standing at 15%. And that's why people now are very worried about it. But in my opinion, I think it actually represents another opportunity, right? Because who knows, SEC after maybe 2 or 3 years after the case settled down, where the crypto market is more developed, is more mature, and there are more regulations, and people are more well educated about the crypto market. And by the time when it's mature enough, the SEC thinks that they can actually convert the GBTC to an ETF. By then, we don't have to worry about the discount anymore. Actually, there are several Bitcoin trusts not in US but in Canada. For example, there are already successful examples like Purpose Bitcoin ETF and also Evolve Bitcoin ETF and also CI Galaxy Bitcoin Fund. They are ETFs launched in Canada. And I think they demonstrated a successful ETF examples for other countries to follow suit, because I think they are doing great, and ETF is definitely better than GBTC, because cheaper management fee, and also the entrance is quite simple, and also not very complicated, because the entrance must be lower, so more people can involve in trading the ETF, and that we have more demand, and ETF is definitely better than GBTC. I actually, if you long Bitcoin, if you think that Bitcoin is going to do great in the future, if you are a long-term holder, I think if you don't have a very tight urgency to sell for liquidity, in my opinion, not financial advice, I think maybe we can hold for some period, and let's see how things develop, and we will have more information to make the better decision. Yeah, that's what I think. Yeah, maybe we can talk about what do you think about it, Dave? Do you think GBTC will be able to convert into an ETF in the future? Any opinions or any questions you want to raise?
I think you spoke very well on the GBTC to Bitcoin issue, that the SEC has rejected the conversion between the premium of sort of a GBTC to Bitcoin. That I think a lot of institutions used to do the arbitrage between GBTC, as you said, to get back their Bitcoin and sell them for an arbitrage opportunity. So it takes a day or two to come back and arbitrage again. So the time frame is like it's very short. I'm not sure how short is that, but back in 2019 or 2020 is so is a very great opportunity for the arbitrage people. But now, as more and more people are, used to that sort of opportunities, and it's gone because it's according to a behavioral analysis. Like the more people know the opportunity, the faster the opportunity is gone. So right now the SEC is just one of the factors that they reject the conversion between GBTC and Bitcoin. So people are not going to convert it, and institutions sort of or likely stuck at the GBTC ETF, or sorry, the GBTC investments. So apart from GBTC conversion or arbitrage, I think not investment advice though. Traders should be aware of sort of any risk associated with the trade. If or arbitrage, whether you're long side, short side, you're delta one, you are doing in delta neutral. I think it's very important to know the risk associated with the trade. Like it's not just about numbers. If you just look about numbers, I think probably you just convert GBTC to Bitcoin, and the premium is so awesome. But the risk is associated with numbers. It's associated with legal entities. So I think if you do the trade, you gotta think about the risk all around, at a micro and a macro level. So what do you think, Johnny?
Yeah, definitely. Actually, we have to price in the risk, right? Because there are some legal disputes about, legal disputes about GBTC shares, and also because SEC disapproved the conversion partly due to the fact that they are worried that the Bitcoin market is not very mature, and there is some market manipulation, and they are worried that investors are not protected well against these bad actors, and they got a point there. And also, I also agree that we have to price in risk, and that's why we have the discount right now. It's actually also partly demonstrates the risk being priced in the GBTC share. And yeah, we have to diversify our risk portfolio and never go all in, right? Right, that's my opinion. Maybe we can move on to other topics, because we still have the BITI.
Yeah, sure. So the first ever short Bitcoin strategy exchange fund was launched a few weeks ago, and it offers investors a cheap and easy way to profit from decreasing BTC prices. And currently we are seeing increase in BTC short inflows. So Dave, can you tell us more about what is going on?
Cool, Hanson. So now we can see that there is a new ETF newly launched. It's called BITI, ticker symbol, BITI. That's the short ETF to Bitcoin exposure. And inversely, we will have the long exposure, ticker symbol ETF BITO for the long exposure to Bitcoin. So right now, for time being, we can see that on the chart we can see that there is a 7-to-1 short to long ratio by inflow. That basically institutions are just bearish on sort of the day, 29th of June. So there is a net inflow of 3086 Bitcoin into BITI short ETF. Again, exposure to short Bitcoin. So you open a BITI, you're basically thinking that Bitcoin is going to down the rail. So there is also a net inflow to BITO, 465 Bitcoin into BITO. That's a long exposure. So that basically concludes that on 29th of June, there was net short position of 1684 Bitcoin inflow into BITI short ETF, and a net long position of 715 Bitcoin outflow. Outflow instead of inflow in BITO, the long BTC Bitcoin ETF. So basically, if you see the market, it's pretty bearish, So back in the days, in the last, sort of a bull cycle, we can see that when there was a launch of a Bitcoin ETF, it basically, topped. I'm just not saying that nowadays we're going to have to see a bottom in the case that a leverage short position on a Bitcoin is launched, so we can have a bottom. I'm just saying that there's a possibility, according to a behavioral trading analysis, that so if I have a ETF, when I'm gonna sell, it's like when the market sentiment is good, it's bullish, I sell a long position. If the market sentiment is sort of like bearish, I sell the short ETF or short position. So it's like so there is a probability that we can see a bottom, but that's just one of the possible signals for the bottom. So engaging in this long and short exposure, no investment advice though. What do you think about that, Johnny? Hey Johnny, would you
You're
like to
muted, John.
unmute your? Would you like to
Yeah,
unmute your?
I'm sorry.
Yeah,
I'm sorry about that. Yeah, yeah, we're definitely seeing a lot of selling pressure in the Bitcoin market and also across the whole crypto market. It actually can we can take it as a reference. We can see it as an indicator showing the demand supply of Bitcoin, what the demand is there, and also the selling pressure. Right now, as Dave said, the short exposure is like 3,000 BTC, right? And compared to long exposure 465, we have approximate like one point something to 10 ratio, and I think the market sentiment is still bearish as reflected by this indicator, and in the short term, it represents what the overall investors think about market, and we are still expecting more bearish development because you can refer to the very great disparity between the short exposure and long exposure, as shown on the chart. Yeah, that's what I think about it. It's a pretty good indicator.
So okay, so moving on to some popular trends in the NFT side. So we're seeing a new type of auction strategy from Doodles that better reflects the market value of NFTs. So to give more context, NFTs are usually auctioned in a auction style, so in which that the auction price starts really high and slowly decreases as time passes. So for example, starting at 1 ETH and slowly decreasing by 0.1 ETH every 15 minutes until they are all sold out. So what would happen is that many degen buyers overestimated the value of the NFTs due to FOMO and hype. So they will buy them at the highest price possible immediately after the auction starts. And many will end up overpaying a massive amount and losing a lot of money. So Doodle's bucket auction strategy was able to prevent this issue and reflect the NFT's real market value. So how does this auction work is that during the auction, users can bid however they want and increase their bid price by any amount anytime during the auction period. And at the end of the auction, a clearing price will be determined so that each NFT in the collection will be sold for the highest price possible. And the algo for determining the price works by trial and error. So for example, the Doodle NFT collection was auctioning a total of 20K NFTs. So the price determining algo will first try a price in the middle point, and if the tokens sold over 20K at that price, the algo will raise the price. And if the collection is sold under 20K units, the algo will lower the price. So that this will be repeated until so that the determined price will allow exactly 20K tokens to be sold. So in my opinion, this auction style is a better price discovery mechanism for NFT auctions. And I believe that it will replace Dutch auctions in the future in the NFT space, as it is less speculative and more friendly to buyers during the bear market right now. And in the last 7 days, we're again seeing a surge in trading volume in ENS addresses. So the top categories remains to be the digit ENS addresses. So we call them the 999 Club and the 10K Club, which stand for the 3-digit number and 4-digit number ETH addresses. So anything from 000 to 999.ETH. And this recent surge in trading volume is led by the different different language versions of the 2-digit clubs. So currently, Arabic 999 club has a floor price of 4 ETH, and the Chinese version of 999 club has a floor price of 2 ETH. So if you want to speculate and degen buy a ENS domain for flipping, you can go on to ens.vision to check out the top trending categories of these domain names. But keep in mind that they are extremely risky and they're just based on hype, and yeah, so do your own research. And Dave, are you familiar with ENS, and can you tell us about the utility of having a ENS address?
I think I'm a big fan of ENS, Ethereum link service, So it's like improvisation of the the Web2 like domain name service. It's like in Web2 that there's an internet domain that you have to own it, and you have to search it and buy it and for the website stuff. So Ethereum name address is basically at the base level, it's copying the ENS. But what is special about ENS is first is associated with Ethereum address. The second, it has the Web3 proof of ownership. Basically, if you own a ENS domain, you basically you own something that you really own it. You really want to own it. It's like, for example, if there's a sort of like Dave.eth or a Hanson.eth or a Johnny.eth, it's basically awesome. It's like I'm printing my name, Dave Chen or Dave, basically on my driving license. I put it on my car, and drive a good way to to something that I really want to own it. The point is you can own it. You can own it on the internet, and apart from owning that domain, you can create your subdomain. Like you can own every subdomain under your domain. So basically, ENS is a sort of like great NFT that it has a proof of ownership. With the on Ethereum address, that's basically one of the safest Ethereum chain. That's the blockchain layer infrastructure with the domain name service. So I'm basically very bullish on ENS. No investment advice though. That's my opinion.
Yeah, I do agree with you. So it's a very attractive idea to own a Web3 domain completely for your own. So moving on, as usual, we'll brief you guys about our Candy Drop event, and we will also be going over questions after the brief. So make sure to type in a question in our chat. So during the Candy Drop event, users with an average spot trading volume above 100 USDT of any digital assets for the last 3 days can register, and participants can win up to 100 USDT per entry and up to 1,500 USDT per week. So the more volume you have, the more entries you can register for, and the higher your chances of winning are. So we'll also airdrop a Candy Drop double up coupon to participants who did not win anything. And using the coupon will double up your chances to win the Candy Drop. And you can stack up to a winning chance of 100%. And moreover, for each Candy Drop event, one lucky star winner will get a grand prize of 100 USDT. So for more information, you can go onto the Huobi app and click on the new listing event page. So let's take a look at the questions.
Yeah, we have some Q&A.
Yeah, someone is asking what about other stable coins?
Other stable coins. I
Yeah.
think they've just mentioned USN, right? But I want to talk about currently, the most familiar stable coins in the market are collateralized stablecoin, which are asset backed, like USDT, USDC. They're over collateralized stablecoin like DAI, and also there are partially collateralized stablecoin just like Lunar, and also Titan Finance if you have ever heard about it. Other stablecoins, maybe Dave can talk about USN, right? You just mentioned it. I think you did some research on this.
Yeah, cool. So USN is basically a unique stablecoin system it launched in NEAR. So NEAR has its own unique settlement currency of this stablecoin USN, and is recently launching USN 2.0. So what was USN 1.0 or USN about is a sort of like algorithmic stablecoin that's basically backed by a bunch of collateral. But in white paper, so after reading the white paper, it said that it's going to launch 2.0. So basically, on Trader, it said that it is backed to by fully collateralized USDT. So Tether is basically the collateral behind the USN stablecoin. So in 2.0 stablecoin, they are going to launch with the different sort of like assets like NEAR, starting with the NEAR native token for the NEAR ecosystem with a bunch of stuff in the future. So I think just my opinion that I think there are going to be more and more like collaterals inside the USN stablecoin system, like maybe ETH, because it's like ETH can bridge out to NEAR ecosystem, ETH to NEAR by the Aurora Bridge and Rainbow Bridge and stuff. It's also maybe it's possible to be backed by fiat, because I see that there's a Web 2.5 wallet by NEAR ecosystem, so that is also supporting some sort of fiat settlement. And also the I want to address that apart from Tether and USDC, there is also a centralized stablecoin issued by Binance that's basically called the symbol BUSD. And it's basically backed by Binance, the exchange, one of the largest exchange in the world. So even though we can see that there are a lot like debates on USN, USDN, that's Waves ecosystem stablecoin, where basically debate of the UST and some debate on a few days in regard to USDT. We can see that BUSD is still staying stable. So I think that apart from to answer the question, apart from Tether, USDC, I think we can also look at for centralized stablecoin, we can also look at BUSD. Yeah, that's what's in my mind.
Okay, so we hope that we have answered your questions. If there's no more questions left, this will be the end of our podcast today. All right, so yeah, make sure to follow us on Huobi Research on Twitter, and you can check us. You can check our reports on Huobi Medium, and yeah, make sure to tune in next week.